General Partnerships 101. A general partnership is a simple business structure that can be created without filing any formation documents with the state. To create a general partnership, two or more persons must simply agree to go into business together. To some extent, it is similar to sole proprietorship in the sense that there is technically no entity filed. However, there are more details to understand. First, let's look at the management. A general partnership is fairly easy to manage and operate, simply because most states do not require that general partnerships submit annual reports or other reporting documents to the state. However, a general partnership may require a business license or permit to operate in a city, county, or state. Whether your general partnership needs a business license or permit depends on a couple of factors. One, the type of business activity of the partnership. And two, the geographic location of the partnership. These two are important because the type of business activity might vary based on location. Business licenses and permits vary by activity and location. Another aspect to look at in a general partnership is a partnership agreement. A partnership agreement sets rules and expectations for the partners. A general partnership should have a partnership agreement. A partnership agreement is an agreement between partners that can either be oral or in writing. It is recommended that any agreement between the partners be in writing, as this can reduce ambiguity in business disputes. A partnership agreement could include information like the percentage ownership between owners in a partnership. You may think it might not be needed for you, but it's a very good idea to have in place in case things change. A partnership agreement can also reinforce the partner's business vision and sets the rules for the partners to follow. Another area general partnerships are different from sole proprietorships are taxes. Let's look at taxes, particularly pass-through taxation. General partnerships have the benefit of pass-through taxation. This means that the profits and losses of the partnership are reported on the personal returns of the partners. With pass-through taxation, the partnership is taxed once, whereas a corporation is taxed twice. This is a tax advantage of a general partnership. The general partnership gives a Schedule K-1 to the partners, and the partners use the information on the Schedule K-1 to report the income or losses of the general partnership on their personal tax returns. If you know a bit about LLCs, then you know that an LLC can be taxed as a partnership if the LLC has two or more owners. But a key difference between an LLC and general partnership is when it comes to liability. So let's talk for a bit about liability. Remember, a general partnership is created without filing any formation documents with the state. This means that the general partnership is not a separate business entity from its owners. Because a general partnership is not separate from its owners, the partners do not have any protection from the liabilities of the general partnership. In business, a liability is an obligation to pay, such as payments on a business loan. And some business types, like corporations and LLCs, protect the owners from being responsible for the liabilities of the company. However, this is not the case with general partnerships. Instead, the partners may all be liable for the obligations of the partnership. This type of liability is commonly referred to as joint and several liability. The lack of protection from liabilities for partners in general partnership is a major disadvantage when compared to LLCs and corporations. Let's summarize this. General partnerships are a simple way for two or more people to start and run a business without having to file any formation documents with the state. But the lack of protection from personal liability for a partner is a serious business risk. If you want to be protected from liability, then it may make more sense to simply incorporate your business as an LLC or corporation.